Being recorded. All right, so let's get started with this. Is anybody excited about the hockey playoffs other than me? Any hockey fans in the room? No? All right, just me then. And no, by the way, I'm not rooting for Toronto. Anyway, all right, let's get started. Enough of that nonsense. I was out golfing today. Can you guys believe that? I don't know what it's like in Ottawa right now, but don't watch hockey anymore. Yeah. I don't know what it's like in Ottawa today, but it was awfully nice here. Raining and snowing. Jeez, that's not good. I was out on the golf course. It was a bit windy, but it was a pretty decent day here in southwestern Ontario. So anyway, all right, let's get started. All right, so John and Nancy are here now. That's good. Okay, we got this recording. I'm gonna share my screen. So I think we'll go back to TOS just for a couple more minutes. Then I want to answer a question that you guys sent to me as well about orders and what gets filled and why. Then, like I said, we'll make a watch list, and if we have time, we'll do a little bit on the covered call. Okay. And as always, just type your questions in at the bottom. All right, just let me know if you can see my Thinkorswim. Got one yes. Got yes. Awesome. All right, so when we were talking about TOS last night, we went over what the cogwheel does here. We went over what the beaker does here. Again, you can set things up in Thinkorswim here to make them easy. Um, can you remove that? Yeah, I can minimize it. How's that? Is that gone, Jocelyn? Is that better? No, it's not gone. Oh, okay. I see what you're saying. Hold on. Hold on a second. Hold on a second. I gotta stop sharing. You want me to hide that? Yeah, see, I couldn't see that on mine, but you guys could see that, so my apologies. My apologies. Okay, that should be better now. Is that correct? Now all you should see in the bottom corner is the chat box. Hopefully that's not interfering too much. If it is, let me know. Okay, so what I was saying before is when you get a certain set of things that you like in Thinkorswim, so like I said, you can see that I keep a bunch of moving averages on here. I usually have one where I have the volatility on there if it's coming up to earnings. Something you guys will find out as you go along in your trading, that the volatility for stocks tends to increase as you get closer to earnings. And that's very important for option traders to know. So again, you can use all this. But if you liked all the things that you had on one chart, instead of going with the default all the time, you could save it as a set. Let me just get rid of this box. You can click here and save it as a set. And it's going to pop up and it's going to ask you for a name. You can put whatever you want in there to save it. Okay. You can always go back to the defaults. That's not a problem. I go in here and I've got a whole bunch of different sets that I've made up. You can go in and get different strategies. Again, a lot of this stuff you're probably not going to use. I know I don't use any of it, but if it's something you feel like playing around with, by all means. Um, like I said, I don't use the strategies too much, but again, I make my own sets because there's certain things, certain types of trades that I want to do, and you guys will be able to do the same thing. Okay, so you got your studies, whatever you want to put on, you got strategies, and you got sets. Okay. Now you can import different if you have different sets from somebody else. So let's say you're in the clubhouse and you're talking to another trader, and they have a particular set on their TOS that that you want to use. They can send you the ID for it, and then you can put it in your computer, and you can go find it in your computer and import it that way. You can create notes if you want, new script basically. You can actually create your own what's called own indicators. You can change certain things on your indicators. Unless you're a programmer, I would suggest that you leave that to them because it is a bit involved. Okay. So that covers those two things. Drawing tools. I know you guys can see I've got some lines on here. Got a million different drawing tools on here. I only use a very few of them. Fibonacci retracements. You guys may learn about Fibonacci or not. Fibonacci extensions. Basically, you want to put it on here, and then you put it on here, and then you run it up to the next pivot. And what it does is it puts all these percentages on here. Again, I don't use this stuff. Some people do. When you go through your master trader, you may see some of this in there. Your instructor might talk about Fibonacci. If he does, this is what it is. Again, I don't use it, but it is a tool for forecasting. So again, if it's something you want to do, by all means, you'll have to just look into it. But to draw a trend line, a simple trend line, you just click it on the trend line, click it once, move it up, boom, you got yourself a trend line. If you want to get rid of it, you right click it, remove drawing. Not very hard at all. The one that I find that's very useful too is this one here is a price level. So if you're trying to find support and resistance and you just click on it, you can actually just click on it twice right at whatever price level, and it'll automatically put the line. If you want to extend it to the left, you just right click. And like I said, this stuff's pretty easy. I won't bore you guys too much with this, but it can be handy to learn a few of these things. What else is there? I think that's kind of really it. You can draw channels, different channels. Again, Fibonacci, a lot of Fibonacci. I don't do any of this stuff. Andrew's pitchfork, I don't even know what that is, to be honest with you. Like I said, I don't really use this stuff. For me, it's all trend lines, price, and support, resistance, price, time. Those are the things I'm looking for. But you will end up drawing trend lines. You might want to put some notes. Sometimes when I find certain levels, I'll put notes there. You can just put a text box there, and you can say text, and boom, it'll crank out one, and you can put whatever you want there. Okay. So hold on a second. All right, my mic is cutting out. Okay, give me 1 second. I just got to reset my internet. Give me 1 second, you guys. Check, check. Okay, is that any better? I apologize for that. My internet is not the greatest. Okay. Thanks, Jocelyn, for letting me know. Again, let's go back to where I was. I gotta share the screen. Okay, so what did you guys get out of there? Where did I lose you? Basically, I was just showing you the tools right now. Like I said, texting, you can put text on your charts, whatever you want. I'll let you guys explore that. I won't go through that too much more. But basically, the ones you probably use are the trend line, the price level, maybe the text, circles, whatever. But pointers, you might use those as well, just to kind of give you reminders. Okay. In the monitor tab, if you have positions, like I talked about last night, when you click this little cog wheel, you can add or subtract anything you want. Like I said, for me, trade price is kind of a big deal. I like to know what my theta number is. Typically, I'll actually add delta on there as well. I want to know what my delta number is. You can find out what kind of position you're holding. This is a 91.40 delta, so that it's positive. So that means I'm long. So, in this particular case, this is a long position. Okay, that's why you want to have delta on there. It tells you the days to expiration in the positions. You can see here in McDonald's, I've actually got a negative position. So this is actually an iron condor. Sorry, no, this is two call spreads. So this is actually a negative delta position, means that basically when you have negative delta, if the price goes down, you make money. If the price goes up, you lose money, and vice versa. What else do we like on here? I think that's kind of it for here. Beta weighting, I won't go into it for you too much. Any questions about Thinkorswim that you guys can think of? Anything you want to know that I haven't gone over? Activity and positions where you'll find yourself most. Your account statement, you can go on there and find out profit and losses by, a whole bunch of different things year to date, all this kind of stuff, right? So you may use that. Charts, obviously, you're going to use the scan tab. You may at some point use this. We're going to talk about making a watch list here shortly. What else is there in here? I think that'll get you guys started, unless you have any specific questions. All right, let's move on. Okay, so I want to show you guys a question that I got before we get to making a watch list. One of you guys sent this in to me. So it says, last week I submitted a limit order to purchase ACB stock at 850. To my surprise, the order was triggered at 815 and filled under the value you set for it. Okay, so this one's pretty common and pretty generic. So there's two types of orders that we can do. Well, there's a million type of orders that we can do, but there's a few type of orders that are more common than others. So the first one is limit. Okay, and limit essentially means that price or better. Okay, I just move this over. Okay, so if I put a limit on a stock, let's get this down to here, and XYZ stock, and I'm buying it. Okay, so if I put in a buy limit order, okay, at let's say put it at $50. Okay, if right now, if the stock itself, if XYZ right now is anything less than 50, it will buy it right now. Okay, and the reason being is it's because it's that price that I put a limit at or better. Okay, what I think the person that asked this question, I think what you were wanting to do is something called a stop limit or a stop order. Okay, if you put in a stop order, and we'll go into that one next, a stop order. Okay, a stop order means it will trigger that order. Come on, that order at the specific price. Okay, So what that means is for this stock, the ACB, I guess it was, ACB, if you'd have put a stop price of 850, that would not have gotten filled until it hit 850, okay? 100%. Now, there's something called a stop limit order, okay? Stop limit order, okay? This is the best of both worlds, okay? So it will have a stop price, which I will show you guys in Thinkorswim, and a limit price, okay? Now, the stop price does exactly what it does with the other one. Stop price triggers an order, okay? An order will do nothing. It will do nothing until this price is hit, okay? Now, with a stop limit order, then you have the limit price, which is the price you're willing to pay, which is the price you are willing to pay, okay? Willing to pay. Now, sometimes this can be the price you're willing to pay. Sometimes the price you're willing to pay can be exactly what your stop price is. So in this particular case, if you were doing the ACB stock, okay, if you did ACB and you put in a stop limit price, stop limit, you could put both of those prices in at 850, right? And that says that as soon as it hits 850, then it will buy it if it can. It will buy it if it can get it for 850. Now, here's where things get tricky, okay? If you put in a stop limit order, which is what I do a lot, okay? I use a lot of stop limit orders. Here's the problem. If you have a stock that's moving extremely fast, when it hits your price, there may not be a buyer ready to sell it to you, or sorry, I should say, not a buyer. If you're the buyer, there may not be a seller that's ready to sell it to you at that very moment for that very price, okay? And if that's the case, it may or may not get filled, okay? If you want to stop, if you use a stop order, what that means is as soon as it hits its price, it will put in a market order. And the market order says you will get whatever it is. Now, if you're using illiquid stocks, which I'm going to talk about when we make the watch list, if you use illiquid stocks, what can happen is these prices can move, they can gap very big, and they're not always going to get it. So I'll go through illiquid in a bit, but just know that if the market's moving very, very fast, and you try to put in a limit price, you may not get filled for what you want. Also, if it's moving very, very fast, you put in a stop order, that you may get a fill that you're not happy with either. Okay, and I'll tell you when we get to the watch list, I'll show you how we keep ourselves out of that trap, if you will. Okay, so basically the thing to know is, okay. Yeah. So okay. So the question is, that's fine if you don't have a stop order option on your trading platform. One, I think you should change platforms, but if you're not ready to do that, that's fine too. Basically, if you have a stop limit, then what you can do is you can put both the stop price and the limit price at exactly the same price. And then basically, like I said, what it does is it will trigger that order when it hits 850 in this particular case, and it will sell it for 850. Now, if it rises above that, you may not get filled, okay? And that's just a chance you take. Whenever you use a limit order, it's trying to get you that price or better. If it can't get you that price or better, it will do nothing, okay? Now, I'm surprised that if you don't have a stop, if you have a stop limit order on your platform, that you don't have a stop order. Typically, they have both. Now, I know some of the brokers have been doing away with the stop orders, which is fine. But a stop limit, basically, you would want to put in the, you'd want to put in, as long as you're putting the same price in. But let me tell you what I do, okay? And this will help clear this up, I think. If I wanted to buy XYZ stock and I put in a stop limit order, okay, if I know that this is a fast moving stock, or I know that there's a lot of volatility in the market, I would be willing to pay this. Maybe I'm willing to pay 50.05 or $50.10. Okay. So what I usually do is I'll put in a stop limit order where I would put in $50 as the stop price. That means it'll trigger at that price. It'll do nothing until it reaches there. And then I'm willing to pay just a little bit more to make sure that I get that stock. Because what you're going to find, and this is very common for a lot of new traders, is they want to do the nickel and dime stuff. Okay. I'll be honest with you, when you get trading more, you're going to forget about the pennies and the nickels, and you're going to be concentrating on the dollars and the $5. Okay, a penny here, a nickel there, it really, in the grand scheme of things, doesn't matter, right? It's about how you set up your trading, so you won't get so convinced. Now, what I do, like I said, is I will give a little bit of room, because I want to make sure that if I'm into this stock, that I just want to be into it, right? Let me show you guys with an example on Thinkorswim here, and it'll make a lot more sense, okay? So let's look at a chart first. Okay, McDonald's is a perfect example here. Okay, so let's say I'm looking at this and I see this resistance here at $165. Okay, but I say to myself, I don't want to get into this until I know that it's broken this resistance. Okay, so what I want to do is I want to go above here so that I know that it's already broken out when I get in. That's called confirmation. Okay, so the first thing I'm going to do is I'm going to look at the high of this candle, and the high of this candle is 165.40. So what I know is that if it's higher than 165.40, then I know that it's broken this resistance level. So what I would do if I wanted to buy this stock is I would go to my trade tab here, and I would click on the ask price, and it's going to populate an order down here. Okay, so this, you can see that it says buy 100 shares of McDonald's, stock price, and it says a limit price. So if I clicked confirm and send right now, it would buy it at a price, at this price or better, any price better than that. Well, that's not what I'm after. What I'm after is a stop limit. Okay, so now I know that that thing was at 165. So I can go into my stop price here, and I can go 165, and the high was 40. So I'm going to go, say, 20 cents above that. So I'm looking at 165.60 here. So what this means is this order will do nothing until it hits this price. Okay, so now I got to change my limit price, and I say to myself, you know what? If this breaks this resistance here at McDonald's, it can get up to, I would say, at least 170, probably 175 before it runs into any serious resistance. So I'm willing to give it a little bit more room just because I want to make this, $10 profit or whatever, right? So in this particular case, I might be willing to pay 165.80, okay, for the limit. So basically, nothing will happen until it hits 165.60, and I'm willing to pay an extra 20 cents a share just to make sure I get filled. Okay, and then we can click confirm and send, and it'll tell you exactly this here. I'll buy 100 shares of McDonald's at 165.80. That's the most I'll pay for it, but it will be triggered at 165.60. Does everybody understand that? I know this might be a little bit much for some of you, but this will come in handy soon. Believe you me. This is how you're going to learn once you go through the Master Trader. This is how you're going to learn to buy stock. Okay, and then options will be the same way. When you want to start buying and selling options, it's going to be the same way. Okay, it's these order types can be a little bit confusing, but as long as you remember that if you have a stop, that means a trigger. Okay, that's what's going to trigger you in. And I know I just literally last week in my lab I had a very similar question. It confuses a lot of new traders, and that's fine. So as long as you understand that the stop triggers the order and the limit is the price you're willing to pay, and that should clarify it. Okay. All right. No other questions on the order types? Everybody good with that? Got it? Sweet. Okay, so let's talk about building a watch list. Okay, Jocelyn, you were the one that asked about building a watch list. So I need to know how far I need to go through this. Now, are you talking about picking stocks for that watch list or actually building that watch list itself? Or did you want me to go through all of it? Okay, where to begin? Okay, so I think I understand. Okay, so the first thing I need to teach you guys is liquidity. Okay, I don't know if I went through this before. If this is repetitive, I apologize, but it's kind of stuff that you need to know. Okay. All right. So when you start looking for stocks, okay, um, there's a million reasons. There's literally a million reasons to pick a stock. Okay, it could be something you know very well. It could be something you're interested in. It could be I don't know. It could be fundamentally sound. There's just a multitude of reasons. Okay, but there's one test, if you will, that every stock has to pass. And I think I talked to you guys at the event about this, but if I didn't, it bears repeating. So the biggest thing with stocks is liquidity. Okay, so what this means essentially is the ability to get in and out of a stock. All right, let me give you an example. If you buy a penny stock, so let's say you buy a stock for, let's call it um, JKL stock. Okay, JKL stock is 32 cents a share. All right, 32 cents a share. Okay, this is a penny stock. Now, if you go out and try and buy a penny stock, if you've got a let's say you've heard the news or you've gotten a tip from somebody that this stock's going to be the next Microsoft or it's going to be the next Apple or whatever it is, and it's a penny stock. Okay, what happens with those is at times liquidity will come into them because of some kind of news buzz or some kind of pump up from somebody. Okay, the problem with penny stocks and buying these things is the liquidity can go away very quickly. So let me give you an example. If I took $1 million portfolio, okay, and I could start buying shares at 32 cents a share, with $1 million, I could buy a fair number of these shares. Is that fair to say? I need everybody to type in so I know you're with me here. Is that fair to say? If I had $1 million, could I buy a lot of these stocks? Yeah. Okay. So let's say I tweeted out. Let's say I'm like Mr. Trump and I start tweeting out that JKL stock is on the third round of approval of its new drug for the FDA, whatever, yada yada yada, and I make up some great story about it. Okay. Well, I could start buying this up myself with all this money that I have. I could start buying, 1,000 shares and 10,000 shares and whatever, right? I could start buying a bunch of shares. Now, the problem becomes is as this moves up, it'll garner a little bit of interest. Okay. Now the problem is because I know when I have such a large amount of money that I can buy these stocks. Well, once it starts getting some interest and other people other than myself are buying it, what happens is the price will start to creep up for a little bit. Well, because I know that whether I made up something about this stock or I just know that it's completely false, whatever the case may be, a guy with the big money will be out of this stock long before the people that hear about it later. So maybe it's even an insider, whatever the case may be. So what happens is when these guys with the big money, when they get out of it, all of a sudden the number of shares of these stocks that are traded become almost none. Okay? And so what happens is the prices start to fall, and then when they start to fall, if there are no buyers to buy that and you're trying to sell it, you got to think of it like an auction. Okay? If you go to an auction and there's something up there that nobody wants, right? There's no buyers around. What's a seller to do? Well, the only thing a seller can do is drop the price. Okay, typically. Maybe they can make it more attractive by adding something to it, but typically they're just going to drop the price. So what happens is in the stock market, like an auction, there has to be a buyer, a willing buyer, and a willing seller for every transaction. And the problem with these kind of stocks is that if they start to fall, what happens is all the buyers kind of tend to run out at the same time, and getting out of these stocks can cost you a lot of money. Like, I mean, a lot of money. Okay, and it's not just penny stocks. There are other stocks that are very illiquid. So the question is, how do we define liquidity? Okay, so my definition of liquidity, it might be different from everybody else, but here's my definition of liquidity. So first of all, if a stock doesn't trade over 500,000 shares a day, now I'm going to put 1 million because there's enough liquidity out there. Over 1 million shares a day per day, I'm not interested in it. Okay, and this is the reason why. Let me show you something here on the charts. Okay, if we go to, let's just go. So look at McDonald's. All right, everybody and their brother knows who McDonald's is, right? So today, just today, there were 5,178,201 shares traded. Okay. Now, if we go to something like CWT, okay, so California Water Service Group. See this volume here? That means 191,015 shares were traded today. Okay. The other thing I want you to see because of this volume, all right. Let me ask you this: do you guys all understand bid-ask prices? You understand that somebody is bidding, somebody has an ask price, and at some point you got to come together. Okay, good. Everybody's with me. Awesome. So if we look at California Water Service here, you can see, and after hours it's always different. It would be a little bit tighter during the day, but you can see there's over a $4 difference between the bid and the ask. Okay, with this, and the volume is 191,000. If I go back to our McDonald's example, it's got 5 million shares traded, and this is down to 55 cents difference. Okay. So what this tells us is there's a lot of people that want to trade McDonald's, and there's very few people that want to trade California Water Service. Okay. Now, 191,000 shares traded. You may not have a problem getting in and out, but then you might have to pay a pretty exorbitant price. Let's say this bad news comes out about California Water Service tomorrow. Let's say the CEO does something silly, and you want to get out of this. Well, all of a sudden, if there's only this many people trading it now, and a problem happens, all of a sudden this bid-ask spread is going to get even wider. Okay, and typically when you buy something, you buy it on the ask, and when you sell it on the bid. Now, what we teach you in Master Trader, and what I teach my mentor students, is we always try and get the middle. Okay, but even if you got the middle of this, right? Let's say the middle be about $38, $38.50. Well, you got to think of that as a commission, because if you bought this and you got the middle, but then you tried to sell it and you couldn't get the middle, all of a sudden you'd lose about $2 a share right off the bat. Okay, and that would be very very hard to overcome. It's the bid-ask spread it's considered a secondary commission, so we want to keep it nice and tight. Okay, so that's the first thing that liquidity is. It has to trade over 1 million shares a day. So Mohammed asks, do you have to look at the average volume? Yeah, you can look at the volume per day. You can actually even go and if you go on FinViz, you can look at the 3 month average volume. You know, basically, if you look at the number here, I'm okay with it. If you see over 1 million shares traded, like let's say let's say McDonald's. McDonald's isn't a great example. Let's say you have a stock that trades 1 million one day, and then the next day it only trades 950,000. I'm still okay with that stock. Okay, like you don't have to get super nitpicky about it, but the average volume I would prefer to be over 1 million shares. All it's going to do for you is it's going to keep you out of trouble. Okay, because if you start trying to trade stocks like this, California Water Service, you might find yourself in a bit of a hole to start with. Okay, so I'm just kind of keeping you out of the harm's way there. All right. So the first thing is it has to trade 1 million shares per day. The second thing is it has to have a tight bid-ask spread. Okay, and that I just showed you there. All right. So this one here, California Water Service has $4, and McDonald's after hours, like I said, has 55 cents. You would see during the day that McDonald's would probably be down to pennies or maybe nickels. Okay, that's how tight this bid-ask spread gets. And what that means is there's enough people trading. There's enough people trading that it keeps the prices tight. Okay, and that way you don't pay extra for it. Okay. Why do I got a bro Brian? Okay, so those are the first two criteria, that tight bid ask spread. Now the bid ask spread is going to be different for every stock, so I'm not going to give you a rule for it. But the best stocks in the world, McDonald's is 55 cents right now. Apple is what is it, 20 cents, right? 20 cents. And this is after hours. During the day, you would see Apple is like a penny or two. It's very tight, very liquid. Look at Apple today. Apple traded almost 23 million shares today. Okay. Um, so with these things, hey, Brian. Um, the reason you want to do this, again, like I said, is this is going to keep you out of trouble. So, whatever reason you pick a stock, you just have to make sure that it's liquid, because if you don't, you may not get hurt right now, but in a very short period of time, there will come a time where things change in that stock, and you may want to get out of it, and you may have a very hard time doing that. And if you can get out of it, it's going to cost you a bunch of money. Okay, so it has to trade 1 million shares per day, it has to have a tight bid-ask spread, and the last thing for me, and it's because I'm an options trader, and you guys will be too at some point, if you're not already, it has to have weekly options. Okay, now the reason I say this is because all the stocks that trade well, that you can get in and out of nicely, they all have weekly options, and I'll show you what I mean. Okay, so we look at McDonald's and we go trade here. You guys can see these yellow ones. Those are the weekly options. That means a lot of people are trading this. Okay, we'll go back to California Water Service here, right? California Water Service. All they've got is monthly options. Okay, April, May, June, September. Okay, it's not very liquid. It's hard to trade in and out of that kind of stock. Okay, so finally, the last thing we want is volume, and open interest on the options. Okay. Now, I'm going to give you a bit of a rule here. I want this to be greater than, where's my greater than? It's greater than 100 in each category. And I'll show you what I mean. Category. Okay. Again, this comes back to, if you guys are going to learn the covered call, if you're going to learn how to do naked puts or spreads or long calls, puts, whatever, if you don't have enough volume and open interest in the options, you're gonna run into the same problem that you would if you were buying the stock. Okay, so let's take a look at this. So if we go into here, and I move this on my chart, and I go to volume and open interest here. Look at so this is the month of May for the California Water Service Group. Do you see all these zeros here? That means nobody is interested in trading options on this stock. So if you went out and bought a stock, right? Let's say you liked California Water Service for whatever reason, and you went out and bought this stock and you wanted to sell a covered call on it, nobody's going to sell you that covered call. Okay? You're not going to be able to make any income off of it. Okay? Now, if we change this back to our buddy McDonald's there, let's take a look and see what it does. Look at the open interest and volume here. If you go to the at the money strike, almost 2,200 people want to trade this right now, and 1,700 or 718 people traded this today. Okay, does everybody understand what I'm saying here? Just want to make sure you guys are all with me. Yes, yes. Okay. So again, this is where you start when you start picking stocks. So I don't care why you pick a stock. Everybody's got their favorites, but if the stock that you pick doesn't meet these criteria, you have my personal guarantee that at some point, I can't tell you when, at some point it's going to come back to bite you. And I'm trying to keep you out of harm's way here. That's my job as a mentor, is to keep you out of harm's way. And so for me, I never trade anything that's not over 1 million shares a day, tight bid-ask spread, has weekly options. I just don't do it because you know what? There's over 9,000 equities out there that we can trade. If one doesn't meet my criteria, I just move on to the next one. Okay. So that's the first place we got to start when it comes to a watch list. Now, how you build your watch list is your business. Okay. Some people like to do it with products they know. Okay. I was teaching one lady a couple of years ago. She was into computers, and so she had a lot of computer companies on her watch list. Okay. Because she was in that realm or in that space, and so she had a bit of knowledge in that space. Okay, so you can choose your stocks that way. Like I said, there's just a million reasons why you can choose them, but again, this is the first test you want to make. This is the first test you want to give it. Okay, if it passes this test, then you should be good to trade it without too many problems. Okay. So now when we actually start building a watch list, again, like you said, to start finding stocks, think of things you know. Does anybody here know who Peter Lynch is? Let me ask you guys a question. I know you're new, but I'll ask you anyway because this is a good segue into what we're talking about. Has anybody heard of Peter Lynch? No. Okay. Peter Lynch was a hedge fund manager, or a mutual fund manager, actually. He managed okay, so Jocelyn's heard of him. Peter Lynch managed the Magellan Fund, or that was the Quantum Fund. Anyway, he managed the most successful mutual/hedge fund of the 1970s right up until the 1990s, I believe. And his returns were sick, okay? And one of the stories he tells in his book, One Up on Wall Street, is he tells a story about how his wife went to the grocery store one day and she came home with this egg-looking thing, right? And it was pantyhose. It was legs pantyhose that were in this egg thing. And if you're my age, you'll remember that, or somewhere in my age, you'll remember that was a popular thing back then. So what Peter did was, his wife was so ecstatic about this product that he went in and he started looking at the company behind it. And I believe the company was Hanes that owned it. But anyway, he ended up buying that company, and it was what he calls a 10 bagger. So he made 1,000% on that stock when he bought it. Okay. So, that's one way that people pick their stocks. So I can't really give you, a tried and true method. I pick stocks that I know things, know things about. You know what I mean? I like bank stocks. I like, geez, there's so many. A lot of people pick the stocks like Facebook and Amazon and things like that. Now, they're going to be hard to trade if you don't have a bigger account. But any stocks dividend payers are good. Again, I can't really tell you all of that. Now, there's other ways to do it. You can actually do a scan and build your own watch list. Let me go into Thinkorswim and I'll quickly show you the scanning tool in here. So if you guys look here, see where it says scan here? So what I can do is I can add in a bunch of stuff. So remember how I said volume? I want the minimum volume to be over 1,000,000 shares. Okay, 1, 2, 3. I need one more in there. So that's 1,000,000 shares max. I don't care about. Okay. What else do I want to put in there? Let's get rid of this one. Let's get into. Could put PE ratio in volume. Let's get rid of a couple of these. Get rid of that. So I'll add study. We're going to add for is volume. Again, we want 1,000,000 shares minimum. This keeps us out of trouble. We can add a study filter. Come on. Let's add a fundamental filter. Let's say I want a certain dividend yield. Okay. I want the dividend yield. I want at least 1%. Okay. 1%. Okay. What else do I want? What else can we add in there? Let's add something else fundamental. Dividend payouts, earnings per share, free cash flow per share. I won't do that. Let's go net income. Yeah, you can pick any of these. I won't get too deep into this, but when I start putting in these filters and I click scan, okay, it's going to give me a bunch of stocks. Okay, so you can always narrow these down. You know, you're going to know a lot of these: Apple, ABB, Abbott Laboratories, Archer Daniels Midland, all of these kind of things. Okay, and you can click this up if you want to. If you want to make it a little bit harder for it to qualify, you can rescan and it'll drop down. So now it's showing us only 247 stocks, right? So all of these stocks kind of meet the criteria. Okay. So again, whatever reason you find that you want a stock, I want you to put it on your watch list. And the way you build a watch list, so after you've chosen your stock and you make sure that it's liquid, and again, this is already doing half the work for you because it's telling you right off the bat, okay, this is 1,000,000 shares traded on average, okay, and it's already taken out all the ones that don't fit that bill, okay. So now Thinkorswim is pretty good this way because when we find a scan like this, if we click this little, sorry, not the cogwheel, we click this, we can just save it as a watch list right off the bat. Okay, so we can call it Thursday night scan. Right, Thursday night scan. Okay, and we can save it, and voila, we now have our very own watch list. Okay, I have a bunch in here, but personal Thursday night scan list. Okay, and so now all these stocks are in here. Okay, now of course a bunch of them probably I don't want nothing to do with, but the point being is you can do those scans. So however you find your stocks is fine. Once you build a watch list, if you want to just build a watch list straight out, if you go to here, click on whatever watch list you're on, and you go to create watch list, okay, and you can call it whatever XYZ watch list, okay, and then you just basically add symbols. So we always want to trade Apple. We might want to trade. Just add some symbols here. We might want to trade. What's a good stock? AMD. United States Steel, whatever. You know what I mean? Basically, there's any reason to pick here, and you just save the watch list, and boom, it's up here for your watch list. Okay. One of the other things that I like to add here for this is actually price. See, I don't trade any stocks under $10. Okay, let's see. So the last price has to be over $10. Okay, and then I click scan, and it makes sure that all my stocks are over $10, and that keeps me away from penny stocks and those sorts of things. Okay, now one of the things that's kind of neat to do. Do you guys all see this little red one here? Does everybody see that? Yes? No? Yes? Okay. As long as you have a red one here on your charts as well, So if I just click this, it'll automatically click to Apple, and then automatically click to AMD, and then automatically click to United States Steel. Okay. So as long as this is what they call linking, right? So I could unlink this, or I can link it back up, and as long as as long as I have this on my chart, then it will click through all the watch lists for me. So if I go to another one, let's go to covered call scan here. As long as I just have that red one there, it'll click through all of these for me as well. Okay. So that's kind of building a watch list. It's really kind of personal. You're going to find some stocks that you like. You may start out scanning, but what you're going to find is you're going to find that you have stocks that you kind of go back to kind of again and again and again. There's just stocks that they just run real nice. You know what I mean? They find good levels of support and resistance. You're gonna add those watch lists or stocks to your watch list, okay? But you got to come up with something that you want to trade. Okay, you can look for cheaper stocks if you have a smaller account. You can look for bigger stocks if you're doing different strategies, right? Like let's look at Priceline PCLN here. Priceline is a $1,900 stock. Okay, a lot of people, I don't even trade that straight up. I would never buy a $1,900 stock. It would make no sense. But there are techniques like credit spreads where I could trade this for a fraction of the price. Okay, so you may use some of these bigger stocks. Google's another one. Google's over $1,000 stock, right? You're probably not going to be buying Google and doing a covered call on it, okay? Because it's just tying up too much money for you. But again, you can do credit spreads on these or debit spreads on these, and you can take advantage of the movement without doing that. So again, just when you're looking for stocks, just find something that you know well or that interests you, and start coming up with some companies. Like that's a big gap. Yeah, that's earnings. So that happens a lot. That's one thing we tell everybody. Don't trade through earnings if you're new. If you trade through earnings, this is what can happen, right? You can get yourself in a lot of trouble if you happen to be long this stock and it drops. What was the bottom of that one was 1169, and the top of that one was 1131. So that's a 30-point drop. Imagine if you're holding that stock, you might not feel too good, right? So, all right, Jocelyn, does that help in making a watch list? Is that helpful at all? Just kind of think about some things that you like. I know when. Can you have more? Oh, absolutely, Mohammed. So as I was showing you here, Mohammed asked if you can have more than one watch list. So you're going to see you can make Johnny, how do you change the display currency from US to Canada in Thinkorswim? Um, I'm not sure you actually can, Johnny and Nancy. Thinkorswim is completely a US platform, and if you're going to use it, if you actually decide to get an actual Thinkorswim account, you're going to have to open a US TD account, a Canada Trust US dollar account, and you're going to have to trade in American funds if you use Thinkorswim. So there's no way that I know of to change it to Canadian currencies. Okay. As for Mohammed's question, like I said, so personal, you can see right here, I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. I've got 20 some watch lists here, and you can add as many as you like. Okay. You just click this create watch list and then type in your watch list name, put a few on them, and save it. And Bob's your uncle. You can make as many as you like. Okay. And you know what? There's, as you can see here, in my personal watch list here, I have a bunch of different types, right? I have a lot of covered call candidate ones. I have some dividend payer ones. I have some bullish stock ones. I have my Monday Night Labs ones. I have Tackle 25. All sorts of watch lists. So you're going to have different watch lists. Sorry, for different types of trades. Okay. So just like I said, there's no bad watch list. All I want you to do is to go back and think about liquidity. Whatever you pick, like I know when Lululemon first got popular, I had some traders that They just, for whatever reason, they gravitated to Lulu, right? So that went on their watch list. And again, as long as it's liquid, you can trade it. If it's not liquid, I would urge you to stay away from it. Okay, and you're going to find that the lower dollar stocks are going to be less liquid than the higher dollar stocks, and I completely understand that. I completely get that. For new traders who don't have a lot of money, that can be daunting. But the reality is, there are some great stocks out there that don't cost a lot of money. Okay, and they are still liquid. You just kind of have to search for them a little bit, and that's where those scans, that scan that I showed you, if we go back to the scan tab here, boom, right there, right? I put a minimum of $10, but I could also put a maximum of say $50. Okay, and then I could scan again, and it's only going to give me 145 stocks that fall between that price. Okay, so even in a small account, these are a lot of stocks that you can trade. Okay, does that make sense to everybody? Okay, Brian says I didn't get the gold key download. Okay, no problem, Brian. Let me see if I can pull that up for you. Actually, let's go. I'm going to get out and stop sharing my screen here. If you guys still keep having questions, just keep throwing them at me, and I'll keep answering them as I try to get this pod up. Okay, where did I put that? Files. Let's go to Files 2 here. Okay, there you go, Brian. Okay, Brian. So if you just highlight these, Brian, if you highlight one, click A, they should go all blue, and click download, and it should just download for you. Okay. Actually, sorry, did you email me, Brian, about that? Yeah, you did email me about that. Okay. Try and download them now, Brian. If they still don't work for you, I sent a message to Sam the other day, but I haven't heard back from him yet. So I think he's actually out teaching. So try and download it now if you can, Brian. And if you can't, then I will figure out how to get it to you. Okay. Anybody else got any other questions? Questions, comments? Okay, so Jocelyn says just to clarify, it's best to use Thinkorswim platform, but use IB to trade. Yes. So I'm not telling you what to do in that particular case, Jocelyn. What I'm telling you is the way I do it, and the way a lot of traders that I work with do it, is they use Thinkorswim to set it up because it's easy to use. Right? It takes a little bit of time. It takes some playing around to get a hold of it, but it's easier to use than a lot of other platforms. Okay, so what I teach when I mentor is I teach people to set up their trades in Thinkorswim, and then I teach them how to use IB to enter their trades. And the reason being is just a cost thing. Okay, because I've yet to find anybody that's cheaper to do the trades than Interactive Brokers. Now they've got some good things about them, and they've got some bad things about them, but the reality is we're just using them for their low cost commissions. Okay, with Thinkorswim, the best commission rate we can get as Canadians is like $7.95 for a stock trade, and it might even be down to $5 now. But option trades are $1.25 per contract, plus there's a ticket charge. It's cost prohibitive to use Thinkorswim as a Canadian. And believe me, I've tried everything in my power to get them to recognize that we have a trading community in Canada, and they just don't seem to care. So until they decide to change, we're kind of stuck with it. But like I said, with Thinkorswim, it's hands down the easiest platform I've ever used. And I've used a bunch of them. Like I've literally had, I think I'm up to 10 brokers now, easy 10 brokers, maybe even more. And frankly, all the platforms that I've used, Thinkorswim's the best. I know the guy that created it, Tom Sosnoff is his name, a very smart trader, very smart man. He made that platform for traders, for people who trade, and he put everything that he could think of into that platform to make it easy for us to use. So, like I said, that's kind of where I'm at with that. If you find that something else works better for you, that's entirely up to you. That's great. But honestly, I I haven't seen anything better yet. So, all right. Anybody else got any other questions? How are you making out with the download, Brian? Are you working it? Is it downloading for you at all? Okay, John and Ash, are you showing us any trades in IB? I can. Um, yeah, I can show you. I can show you my paper trade. So we're gonna do one more of these next week, next Thursday. Um, I think next Thursday. It might be next Wednesday or Thursday. I'll let you guys know by email. Might do it next Wednesday. Um, but yeah, we're gonna do one more of these, and I'll show you. I'll show you my paper trade in IB. I'll show you a few things in there. As always, if you guys get into the IB, and you have questions, you can always email me. I'm always more than happy to answer the questions for you. But yeah, I can show you a few things in IB just to make it. I don't want to get too deep into it, but I will show you a few things in it. It's not super hard to use, but it's not as seamless as the Thinkorswim. So next week, what we'll do is we'll do a little bit of IB, and we'll talk about covered calls next week as well. Okay. All right, that's 8:02, everybody. The hockey game's on, so I want to go watch it. Anyway, if you have any other questions, fire them at me now, and if not, it's not working, Brian. Okay. All right. I'm going to keep working on it on my end, Brian. I'll see. Maybe I have to break these down and send them to you in a bunch of emails. But I want to talk to Sam first because there might be a way that we can just send you a gold key. Like in the mail or something. I don't know. I'll talk to Sam. That's kind of his gig, but I will make sure that you get it at some point, Brian. Okay. Mohammed, it's not working for you too. Okay. Um, hmm. Yeah, I wish I knew why. Okay, I will. I'm going to make a note right now for both Brian and Mohammed, and I will make sure that we get you a gold key somehow. Okay, if that's all, folks, I'll let you guys go, and I'll talk to you next week. Like I said, I'll send out an email. It's probably going to be Wednesday of next week for our next thing there, but I will let you know early in the week, or maybe even on the weekend. I'll send out an email. Okay. All right, everybody, have a great night and great weekend, and we will see you next week. And sorry, let me throw up before I go. I'll throw up the other discussion notes here. And this is my email address if you guys have questions. Okay? All right. Thanks, everybody. I appreciate y'all. Have a great night. We'll talk to you later. Bye for now.